Thank you for joining us for today's webinar, 4 Ways Procure-to-Pay Automation Helps Accelerate Business Growth, sponsored by Corcentric. My name is Mark Brousseau. I'll be your host for today's webinar. For the past 26 years, I've been an analyst, speaker, writer, and marketer specializing in accounts payable, accounts receivable, and payments automation. I live in Philadelphia. A few housekeeping items before we get started. If you have any questions during the course of today's webinar, I encourage you to use the question bar on your screen. Go ahead and send us those questions electronically, and we'll respond to those at the end of the webinar. So as the economy is improving, businesses are becoming more confident in their ability to grow. This is going to have big implications for finance in general and procure-to-pay in particular. And that's the objective of today's webinar. We're going to show you 4 ways that P2P can support business growth. We're also going to provide you with an action plan for putting the strategies we're going to share with you today to work in your own organization. So let's start with the good news. Businesses are bullish on their chances for revenue growth in the United States. We have reached exit velocity on the economic malaise that we've been in for seemingly ever. Small and mid-sized businesses in particular expect that a strengthening economy is going to lead to revenue, sales, and profit growth for the rest of 2019. The thing is that what many businesses overlook in their growth projections is the outsized influence that their finance function can have when it comes to achieving those targets. Inefficient and ineffective financial processes, including those in our procure-to-pay departments, well, they can hamper your business growth. Businesses get this. More businesses are recognizing that finance can be a driver of their strong business growth. And so we're seeing that finance is expanding beyond its traditional back office role into strategic activities that can really drive business growth. Things like improving net profit margins, increasing enterprise agility, freeing up cash flow, and mitigating compliance risks. Make no mistake about it, folks. It's no longer enough for you to be a financial scorekeeper. Your business expects you, needs you to be a financial strategist. And that means we need to up our games. And when we think about this transformation of the finance function into a catalyst for growth, well, it all starts with the C-suite, with our CFOs. CFOs are having more influence in areas that have broader consequences for the business. In fact, 81% of CFOs see identifying and targeting areas of new value across the business as one of their main responsibilities. This is hardly what we've traditionally thought of as the CFO's role. But the CFO's role has evolved over the past several years. They've gone from being an accountant to business partner, to a strategic advisor across the entire enterprise. In many cases, they're working with stakeholders across the business on things that are going to drive growth, whether it's digital transformation or financial strategy. They are the economic guardian of planned outcomes for digital investments. They're a big deal. And you know what? Procure-to-pay is going to play a crucial role in the finances department's ability to drive this growth, to support their CFO. During the rest of this webinar, we're going to show you 4 ways that P2P can help accelerate your business growth. The first way that P2P can help accelerate business growth is to digitize processes to increase margins. People ask me all the time, what is it that sets best-in-class P2P departments apart from their peers? Well, studies show that there's really 3 things. Number one is their level of efficiency. Number two is their approach to accounts payable automation. And number three is their ability to efficiently and effectively manage cash and spending. But when we look at these three items, one thing underlies all of them, and that is the need to eliminate paper-based processes. Folks, digital technologies automate the procure-to-pay cycle from end to end, and that helps you support business growth. And there's a couple of ways that it does that. It starts with purchasing. We think about the efficiencies gained by digital purchase order approval and presentment, the ability to smooth out those lumps in the trade and commerce environment. Next, we think about capture, the centralized intake of all paper and electronic invoices. Paper invoices were hard enough to deal with, but now organizations have invoices arriving as paper, email, fax, web, mobile. It's imperative that you have a way to digitize and standardize the handling of any invoice, regardless of how it enters your organization. You also need to think about virtualization, this conversion of invoices into electronic data for matching and processing, so we can get away from all these manual tasks that drive up costs and lead to inefficiency and errors. Also need to think about electronic invoicing, the digitization and aggregation of invoices into existing systems and databases. Our ERP is crucial to managing the financial health of the business, to helping make strategic decisions. And yet, in many cases, the processes that sit in front of it are kludgy, manual, semi-automated. Electronic invoicing solves that. You also need to think about holistic payments, disbursements in the supplier's preferred format from a single file, so you can optimize your payments to capture more early payment discounts, to earn cashback rebates, to extend your days payable outstanding, and yes, to reduce costs. And finally, when it comes to automating the P2P cycle, you must have seamless 360-degree visibility into transactions and suppliers, and that can only be done with a tight integration with your legacy ERP systems. Compared to their peers with little or no automation, highly automated procure-to-pay departments are in a better position to help support business growth. Now, don't take my word for it. Let me give you a couple of examples. First, digitizing P2P processes help businesses lower costs, which translate into higher profit margins. Highly automated P2P departments can process a single invoice for less than 1/4 the cost of their peers with little or no automation. Think of all the manual keying, paper shuffling, physical document routing, nagging of approvers, back and forth, emails and phone calls, keying into ERPs, and manual reconciliation that goes on in the typical AP environment. It's no wonder controllers believe that AP is one of the most costly finance and administration functions. When you digitize your P2P process, you're able to reduce your invoice processing costs, in many cases, by 85%. That means that if you're processing 5,000 invoices per month, it's costing you about $64,500 based on industry benchmarks. Well, if you have a highly automated operation, now those same 5,000 invoices are only going to set you back about $8,800. Folks, that's big money. And that's the kind of money that contributes to greater profit margins. But that's not the only way that digitizing your processes help you grow your margins. You can also improve productivity per full-time equivalent through digitization. This chart is staggering. When you look at the level of automation, organizations with a high level of automation are able to process more than 13 times as many invoices per FTE compared to their peers with little or no automation. What's more, if you combine a high percentage of PO-backed invoices with a high level of automation, now you're going to get 16 times or more productivity than your peers with little or no automation. We all complain we don't have enough time to do the things we need to do in our AP departments, the things that matter, like data analysis, supplier management, cleaning up that filthy vendor master database. Well, when you can improve your productivity, you're able to free up staff for those higher value activities. That's going to help you achieve strategic objectives. And yes, it's going to contribute to higher profit margins. It's not the only way that digitization helps grow your profit margins. You're also able to pay more of your invoices on time when you have a highly automated operation. We know that late payment penalties can be an unfortunate fact of life in an environment where we have manual and semi-automated AP processes. Well, in a highly automated digital environment, those are a thing of the past. And instead of having those late payment penalties chip away at our profit margins, we're now able to turn the table. Now we're able to pay invoices faster and open the door to more early payment discount opportunities. That's right, instead of late payment penalties, now we're able to capture early payment discounts. 80% of suppliers are willing to exchange a discount on the invoice due amount for early payment. On average, suppliers are offering up 2% on invoices. But believe it or not, in certain industries, places like biotech, consumer packaged goods, high-tech consulting, a quarter of buyers are capturing discounts between 6 and 12% on the invoice due amount through early payment discounts. You better believe that that's going to have an impact on your cost of goods purchased. And it doesn't mean that you have to capture every discount opportunity that comes in the door, but CFOs want the opportunity to say yes when cash flow allows. And not only will you be able to capture more early payment discounts by digitizing your processes, now you're also going to have better visibility into your financials. You're going to have fewer calls from suppliers about the status of invoices and payments that chip away at your staff's time and cut into your margins. Digitizing your invoice processes also help you stand out and scale up. These are big contributors to earnings before interest, taxes, and amortization, EBITDA, as they say. Certain automated solutions provide a platform for finance improvements that meet the needs of suppliers with varying levels of billing sophistication. In other words, when you're able to accept invoices in any format, your suppliers will have an easier time doing business with you. Investments in automation have traditionally been influenced by the finance organization's desire to improve operational performance and reduce costs. But automation strategies are shifting to more strategic opportunities, and chief among these is improving business growth. In fact, 41% of CFOs say their company's digital transformation investments are meant to help them overtake the competition. Think about that. CFO wants to win. They want to bring it on to the competition. This is awesome. And anticipated business growth is another reason for finance departments to automate. As businesses grow, their financial responsibilities and processes are going to grow along with them. And as a result, those inefficient and ineffective financial functions, such as procure to pay, are more likely to falter and cause disruption. So you need the ability to scale, and you can only do that if you digitize. Paper processes are simply not scalable, and we don't have people to throw at these problems anymore. And none of these benefits I've just described are possible unless P2P departments digitize their processes end to end. You want to find that paper and those simple manual tasks and root them out so you can grow your profit margins. The second strategy for accelerating business growth through P2P automation is to deliver actionable insights to the enterprise. Achieving strong business growth requires businesses to know where they stand at any point in time. But most businesses can't make heads or tails out of all the data that flows through their enterprise. Folks, data overload is real, and it is growing at the speed of modern business and technology. You better believe that as the economy improves, you're going to have even more data flowing through your organization. And you know what? Businesses are actually counting on their CFOs to make sense of it all. 38% of CFOs surveyed by KPMG say their finance organization is challenged by increasing demands for real-time data and analytics dashboards. Hey folks, the pressure to improve visibility in financial data is impacting P2P already. 59% of you say that your demands for real-time visibility invoice and payables information has increased compared to 2 years ago. Half of you foresee even higher demands 2 years from now. So if your knees are already buckling, I've got bad news for you. Things are going to get worse. And this is no surprise when you consider that CFOs rank cash flow analysis as their top job function. This is what keeps them up at night. They need to know where things stand with their cash. Businesses also want to leverage their payables data to influence business outcomes and help senior management apply financial data to strategic decision making. The first step to delivering these actionable insights, well, it's to eliminate paper. Paper documents can be lost, they can be misfiled, they can be misrouted, they become stuck on somebody's desk, they can be sitting in somebody's inbox without them ever knowing it. And then what happens? Your staff wastes a lot of time searching for these documents to respond to inquiries from suppliers or stakeholders, and all of this is going to delay processing and hold up your payments. What's more, manual processes make it difficult for P2P managers to track your staff productivity. You simply don't know how productive your staff is. Without a view into the status of invoices and payments or employee workloads, you'll never know where your bottlenecks are. You'll never know where your opportunities are to improve your cycle times or to eliminate wasteful activities. And if you've got remote or field workers who are required to approve transactions or documents, well, now they're tethered to PCs. Or if you're in a paper environment, worse, they're tethered to their desks. How in the world are they supposed to approve invoices in a timely manner if they have to be in the office or connected to an internal network? People are on the road more than ever. They need the ability to approve invoices via mobile device when and where they want to do it. And digitization helps your P2P department do all of this. It gives your CFO, as well as the other stakeholders who are charged with growing the business, the information they want and they need. The next step to delivering the value to the enterprise is to unlock this visibility into processes, cash, and spend. Best-in-class AP departments are 156% more likely to measure AP operational performance on a monthly or even more frequent basis. These folks understand that financial data is very important to the business. It drives so many of the things that we take for granted. Activities like forecasting, budgeting, planning, resolving exceptions, collaborating with finance and procurement, developing payment strategies, managing our suppliers, and of course, handling our cash and our liquidity. Over the next several years, organizations expect that P2P data is going to be used even more across the organization. I hear from P2P folks all the time that they're having more stakeholders than ever call them, asking for reports that they've never been asked to generate in the past. This is the fallout from the recession of 2008. Organizations recognized if only they could unlock the data that flows through P2P, Now they can better manage their cash and their spend, to know how they're doing against their budgets, to know if they're in line with their contracts with suppliers, to know who they're spending money with or what they're spending it on. Well, automation helps provide that visibility across the P2P lifecycle, so your business has timelier and more complete visibility into that cash and spending, those key barometers on how your business is performing. CFOs can use this data to reveal business opportunities and support investment decisions. Should we add that additional product line? Should we have an additional shift? Well, think about it. For starters, automation puts the information required to guide business growth at the fingertips of your users. That's right. And in some cases, in the palm of their hand if they're using a mobile device. These analytics tools, such as the ones from Corcentric, they enable procure-to-pay organizations to improve functions such as data discovery, forecasting, decision support, financial planning, modeling, and even exceptions detection. Digitization empowers users across the enterprise to monitor their budget performance with tracking of cost and consumption metrics, full visibility into spending trends, graphical snapshots of actual versus budgeted spend and use, and even the ability to manage utility costs and consumption in a single location. You can instantly generate reports, and you can filter them by service type, time period, location. Think of all the time we waste on Excel spreadsheets, particularly at the financial close. All of this could be generated automatically, delivered to key users in a personalized manner when, where they need it, effortlessly. And assessing all of these trends, this is going to give you big power when it comes to working with your suppliers. Now you're going to be able to get insights into your outgoing payments, your supplier relationships, your transaction volumes, your PO versus non-PO spend, your DPO, your DSO, your time frames. All of this is going to show you low-hanging fruit for where you can help wring out costs, seize opportunities, and, grow the business. You might be able to identify a segment of suppliers that are ripe for virtual card payments, for instance. All of this can be done with the types of reports that are out of the box with solutions such as Corcentric. And these analytics are key to understanding where your biggest barriers to growth might reside. See, when you can assess trends in your incoming and outgoing payments, your supplier relationships, your transaction volumes, these kinds of things, now you're going to be able to take control over what's going on in your financial department as well as your business. Strategy for accelerating business growth through P2P automation is to optimize working capital to free up cash. We all know that cash is the lifeblood of any business. It's required for the purchase of goods and raw materials, the creation and distribution of finished goods, sales and marketing, payroll, and yes, business administration. And it is no wonder why CFOs look for ways to keep more cash on the balance sheet longer. It's their top job. It's the thing that keeps them up at night. But digitization plays a big role in helping CFOs and the business free up cash they need to grow. Think about it. Leveraging certain card programs for electronic payments enables you to instantly extend your DPO without changing your payment terms to suppliers. In this scenario, the funding for a payment program is provided by your bank via a card. You also cash in on the fact that the payback period to the card kicks in only after the payment is initiated. In many cases, organizations are extending their DPO by a few weeks just by paying their suppliers with a card. It also allows you the opportunity to earn cash back rebates. I hear all the time from businesses who are earning rebates on 30% of their spending. And while the level of rebates you earn will vary, this can add up fast. And in some cases, the cashback rebates earned by businesses are single-handedly transforming procure-to-pay departments into a profit center. In other cases, it allows them to fund automation. Automating your procure-to-pay function also can improve working capital through the capture of more early payment discounts. We touched on this earlier, but automation, it makes it easier for you to approve invoices within the early payment discount window. Most of you aren't able to capture most of the early payment discount offers you receive simply because you can't approve invoices fast enough. Well, digitization changes all that. It accelerates your cycle times by 2/3 or more in many cases, and this opens the door to many more early payment discount opportunities. You also get an opportunity to offer supply chain financing to your suppliers in those cases where you want to preserve your cash balance sheet. In this case, a third party is taking the ownership of paying your suppliers. You typically get a cut of that discount. You better believe that P2P departments are making full use of discount capture. Companies using P2P automation are 7 times more likely to capture more early payment discounts than their peers with little or no automation. And in the future, this is going to become a bigger and bigger deal. P2P departments are focused on working capital like never before. 57% of them expect to earn more card rebates within the next 3 years. 52% of them expect to capture more early payment discounts within the next 3 years. And 34% of them expect that their standard payment terms are going to increase between 15 days and 90 days. All of this enabled by digitization frees up cash that can be invested in your business and help you grow. The fourth strategy for accelerating business growth through P2P automation is to mitigate compliance risks. You know, it's really hard for a business to grow if you're constantly looking over your shoulder for risks. With the implementation of GDPR, the growing number of U.S. states initiating consumer privacy regulations, we're all under heavy pressure to maintain compliance. And a lot of you are struggling to keep up with the ever-increasing velocity, volume, and veracity demands on your data in order to meet regulations and even internal objectives for reporting and risk management. That's where digitization comes in. Through digitizing your P2P process, now you're able to increase accuracy. In many cases, you're going to have the straight-through processing of critical data in accounts payable systems without relying on error-prone manual rekeying of data. This is going to eliminate those errors and risks that can cost you in terms of fines, penalties, sanctions, lawsuits, reputational brand damage, and yes, lost staff time. Many digital systems, such as those from Corcentric, have automated system-level controls so that you're able to comply with internal audit policies and SOX, automatically detect duplicate invoices, validate user approval levels, ensure chain of custody, get visibility across the invoice lifecycle with a full audit trail, and ensure that documents are automatically retained and destroyed per your requirements. Look, businesses have high expectations for revenue, sales, and profit growth in 2019. And the message we want to give you today is that finance can play a big role in making these growth projections a reality. Digital procure-to-pay technologies such as PO requisition and presentment, capture, virtualization, e-invoicing, holistic payments, and ERP integration, well, they can help your business increase its net profit margins, improve agility, free up cash to pay down debts, and mitigate the risk of compliance violations. When you have a digital procure-to-pay function, now the C-suite can better navigate today's competitive global economy. They can optimize their growth opportunities, and they can do that regardless of the economic environment. So that means that when things inevitably turn south, you'll be ready. So you can cash in now as well as later. One question we always get is, well, how do we get senior management to buy in? Well, it starts with detailing how procure-to-pay improvements will reduce costs and improve efficiency and effectiveness. And then you want to show those current metrics, such as those we've outlined today, and detail what it's going to take to improve your effectiveness. And finally, you want to spell out the comparative ROI. Provide senior management with a best case scenario, a worst case scenario, and a most likely scenario, and show them how procure-to-pay automation can help them achieve business growth. Now, if you want help in converting your P2P function into one that can drive growth across your enterprise, I invite you to contact my friends at Corcentric. That's all the time we have for today. On behalf of Corcentric, this is Mark Brousseau. Thank you so much for joining us.